GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So a bit of a drop in the US dollar at the end of last week, so that gave the euro a chance to rally back up to 118. Big drop in dollar yen back through the 110 handle, and the S&P 500 just edging back off record highs, but still pretty much near record high territory, and Bitcoin pushing up into 48,000. So the resumption of the uptrend in cryptocurrency is an interesting one to look out for the week ahead, as is gold approaching the 1800 level. So we'll touch on all of those things in this webinar. Any other charts you want us to discuss, please drop a comment in the video. Otherwise, if you're just getting some benefit from the video, please click that like button. That always really helps. Let's start with the euro. So this is the 4-hour chart for the euro-dollar currency pair, and you can see we've got the 20-day moving average in there, and we're just testing the 118 level and the 20-day moving average as we speak. We're getting a bit of a rally off the lows, and you can see that we've basically come down to test 117, as well as what seems to be a fairly consistent down sloping channel line, and I think that kind of defines the trend as we are at the moment. If you remember, last week the week before last, we'd been looking for a reversal to the top side, but didn't get it, and we got a downdraft, and now is a kind of pullback. And I would still say that the situation is that we're still in this downtrending situation, but it's changing. It's turning a little bit more rangy. We broke to the top side, we broke to the bottom side, we're back up again into the middle of the range. So a downward bias, but a bit more rangy. Can we get a drop down here from this 118 level? Certainly we've got these two resistance points, the moving average and the round number all together here. So we could sell off from here. If we manage to get a bit higher towards the top of the range, then we'll come back into this major supply area up here, depending on how far it can kind of shift along. If we came up and fell into that, it would probably combine with that trend line again, and that could be another selling opportunity. Obviously, if we get through this declining trend line, and if this channel finishes, then it looks, then we actually can turn a bit more positive. So it's probably above 119 and above this declining channel for us to turn more structurally positive on the pair. For now, it looks like a downward bias, and we're just looking for sell opportunities. I wouldn't necessarily call this one, as it stands with these small candlesticks at the start of the week. I would assume that we will push further to the upside, but the trend is down, as I say. Let's move over to the British pound. This is a potentially more interesting one, I think. It hasn't happened yet, but if we are able to get a break through the top of this falling channel, obviously we've basically come down off the top of the channel for the time being. If you draw it through those highs, maybe rather than the first one, we're dropping back through it. But if at some point later in the week, if we can get a break through the top of this rising channel, it looks like it's a part of a longer term bull flag. It's a bit long for a bull flag, to be honest with you. They normally are kind of shorter term patterns. But you can see there is a bit of confirmation from the RSI where we had a down slope, we broke to the top, so we pulled back right back down and kind of double bottom, but actually tagged the trend line again, and we rebounded. So RSI is suggesting that this downward momentum is over, and this bounce off this kind of double bottom here, RSI is signaling that this is actually the start of a new move to the upside. But we can wait for some confirmation. We can wait for the move through the rising trend line, perhaps a run up to 139, and then waiting for pullbacks from there to take advantage of this breakout. So let's see what happens with there. It may be that we just continue down through this channel for the time being. That's how it looks from the top of the channel. It is a sell opportunity up here, but I would just argue that the RSI signal combined with what's basically kind of a double bottom down here, I wouldn't necessarily be this doesn't seem like a very strong movement. It seems like we kind of found a base at 138 and trying to find an excuse to break to the top side. Moving on to dollar yen, I mentioned we'd had a bit of a sharp downdraft. I mean, it looks worse than it is on this chart because actually we've been range trading in, this, here's 111, 110, 109. So you can see it's barely been a 200 pip range. We've been struggling at 110.70, and then a few different levels on the downside, with the worst beneath 109. Remind ourselves of the bigger picture. We had a big rally up, and we basically just turned into sort of sideways ranging conditions. And we've sold off from this level up here, the 110.70, 3 times, and we're back down through. It's a 100-day moving average on the daily chart. It's not so significant, but it sort of looks overall like we're just in a kind of a bigger range trade. And it's quite possible that we just come down to test the bottom of the range along these lines, below 108 at some point, because we've failed to make a break to the top side. We've struggled 3 times at levels beneath it. Naturally, if it's just a range, you're selling the top of the range down towards the bottom of the range. But it's been a choppy whole process. No real clear direction at the moment, especially since we broke this. We had a nice trend for a while. But we broke through it and we've just turned sideways. Moving on to gold. Obviously, last week was a pretty wild week, starting with that sell-off at the start of the week, and then we pretty much rebounded, all the way. Not quite all the way of that sell-off. Pretty much we need to get back up to 1800 for the sell-off to have completely unwound itself. We're still, if we look at this daily chart, again, it's kind of a bit like dollar yen, but it's been lasting for a lot longer. This is when we peaked last summer, and we've pretty much just been in this choppy old down sloping range for a year now. And was this the kind of wipeout bottom, which we can start to build some strength on? Possibly. But I wouldn't be particularly positive on this pair until we get beyond 118, and I think around 118 people are going to be eyeing up selling opportunities if they're not already. One positive note is that we did get through this little small no, it's turned into a tiny little there we go. The fact that we managed to get, there wasn't any dramatic sell-off off here. You can see there was a small reaction, came back through 1750 and rallied back up again. So that's positive for now. We're getting some momentum going from this upside. So some people think this is the bottom, obviously, haven't sold off straight away. The next big one is as we get back up to 1800 and where this big sell-off really kicked in. So this was the kind of eventual sideways pattern that broke lower. And then on a slightly smaller time frame basis, you can see it was this small consolidation and then eventually crashed down to the downside. So with that logic in mind, I think this 1800, you want to be looking for some reversals in this area. It's the 20-day moving average, it's 1800, and it's where we dropped. So keeping a downward bias, looking for opportunities around 1800, but if a breakthrough there, and then we can sort of say, well, we're back into this choppy range trading. We wouldn't say it's an uptrend, but at least averted all the kind of downside signals from this big sell-off. Now we're on to silver, and similar sort of situation here where we were in a downsloping channel, and it had been fairly consistent with a few lows and a few peaks. And you can see we got that first sell-off down to the bottom of the channel and then wiped out through the bottom of the channel, almost came down to 22. And we rallied up nicely, tagged 24 in the space of a day, pretty wild trading. Came down, tagged 23, and we've rallied up a bit since then. So obviously, it's trading between the round numbers. There's no clear direction, but for the moment, looking mildly positive. looking for potentially a move. If we could get up above 24 again, you can see we've broken this small little declining trend line. If we could get up through 24, we'd be looking for potentially somewhere to sell in near that trend line. And then if we got through this supply area, we'd be feeling more positive again. Obviously, the bias is downwards here, and even if you're not trading it right down to this spike low, I think you tend to be wanting to looking for the sell opportunities rather than buys in this kind of environment. You can try and pick the bottom, but it's probabilities are on your side if you try and ride the trend for the most part. Moving over to Brent crude, again another example of a slightly choppy market. We did bottom down at 67.50. We got a nice rally up there, and then we basically tried to kind of break a sort of declining trend line last week, but we've fallen back from it, and now we're coming back into the kind of demand area here. So this potentially a buy opportunity. Yes, I know that we're below the 20-day moving average, which we've just plotted again. As for those who aren't familiar, we plotted a 120-day moving average on the 4-hour chart, so kind of roughly be equivalent to the 20-day moving average, which is a bit more widely followed. So we're below the 20-day, we're below this declining trend line, but we have bottom down here. So if we take this bottom as something a bit positive, a potential double bottom setting up, we've come off this declining trend line again. But if we are going to eventually break above this declining trend line and maybe even back above the 20-day moving average, and maybe move up towards eventually tagging 75 or maybe even just 74 again, it is about this area where we first accelerated to the top side, drifted back down. Buy orders came in, pushed the price up. Got too high, let it drift back down, and then the buy orders, the rest of the buy orders, push it up again. So it needs to really probably rally in here. It could drop down to the lows again, but that probably wouldn't be such a good sign to be bullish. So the next opportunity to buy would be down here somewhere, where we first accelerated off the lows. That could be the case. Obviously, you get a much better risk reward if you're buying down here. And while you're still above these lows, I think it's justifiable. I don't think it's a really strong downtrend that you're trying to buy against. So there we go. Some potential opportunities here in oil on the upside. And obviously, the other way to play it is if you don't buy down here, but you wait for the confirmatory move to break the trend line. You wait for a push to the top side, and then you wait for a pullback after that break higher. Moving on to the S&P 500. Yes, I mean, it's been pretty steady stuff. If you just gradually buy every few days in the S&P 500, you've not gone wrong. It's not my style of trading. I tend to like to have cleaner swings to buy into, and it's not really the way the S&P 500 is trading. But if you have a different system, which is kind of regularly buying into the market on kind of small declines of no particular technical description, but maybe of a certain percentage or something along those lines, maybe just trading on smaller time frames like a 15-minute chart and using some moving average crossovers. I mean, it's just such a strong uptrend. Apart from the occasional whipsaw, this can be a very lucrative market, very just steady, reliable uptrend. At some point, that's going to change. Will it be this week? Possibly, but I don't see any particular catalysts. The infrastructure bill was passed in the Senate. That's generally kind of positive for stocks, but it's not going to be passed in the Congress just yet. In terms of macro pictures, earnings look good. There's a possibility that earnings don't improve again in the third quarter, so maybe they're as good as they got. You can come up with various reasons, but for now, the market's pretty much ignoring all of them and just trundling higher. So best not to try and justify why to sell. Just wait for that first move to the downside and try and ride it. So, for example, on this occasion, we were pushing higher with that first down drop here. And people tried to sell into it. It didn't quite work, but you can see not long after, we pushed a little bit higher, and then we took out some lows and then got the big downdraft. So if you see a bit of sudden action, there's always a chance to sell into it, and it could be wrong, but if you are right, then obviously you get like a quick, fast trade out of it. Last but not least, Bitcoin. So yes, up towards the, did we actually get to 48,000? No, I think we were just, very close to 48,000. I think we just tagged 48,000 and we pulled back a bit from there. Generally positive. We've been positive since last week when we got that breakout. Here was the sideways range. And when we got the breakout from there, that was a positive sign. It seemed like it had bottomed. And so some interim resistance up here. We're basically, you could say that we're tagging, if this was like a head and shoulders pattern potentially that we broke down from, then we're tagging it again now about 48,000, and then resistance above here just comes from some previous, let me just take off that for a second, where we really kind of started to sell off on this second occasion and gapped lower. That provides some slight resistance there, and then we've got where we really start to sell off. If we drag this line across, I think that comes in about 51,000 if memory serves. Way off, 53,500. So I think, the first one. That's what I meant. The first one was 51,000. This zone through here, and then 53.5. At the moment, the trend's higher. We've broken this little short-term line of resistance. We've pulled back to it, rallied up. Let's see if anything more dramatic happens from 47,500. But I think that's probably what this consolidation was just before we got to it. That's what this was all about. This kind of head and shoulders situation. I think overall the market's positive and pushing to the top side, but just look for these areas up here for maybe take profit opportunities or areas to wait for the dip to buy into. Okay, I'm going to call it a day there. Thank you very much for watching, everyone. Good luck trading this week. It is the summer, so just watch out for choppy trading conditions. It can be good because you get sudden quick moves because there's a little bit less liquidity out there, a little less buyers and sellers. People are on holiday, but trends tend to not be quite as reliable. So certainly a lot of things going on, interesting moves in the markets, but yes, bear in mind it is summer and that can affect trading conditions. All right, thank you everyone. See you at the same time next week.